Ramesh Nayar, CEO and MD of Mindspace Business Park REIT. And joining on the conversation is also Abhishek Goel, in fact, in our studios, Managing Director and Head of Infrastructure and Real Assets at Neo Asset Management. Gentlemen, both of you, thank you so much for joining in. Ramesh, shot in the arm for your business or for businesses like yours?
Definitely, Neeraj. This is a very, it's a big milestone moment for us. Will definitely help improve perception of REIT as an asset class. Truly a game-changing moment for us. REITs were previously considered a very niche kind of an instrument. With this, it's going to help become a mainstream asset class. And globally, REITs were anyway classified as equity instruments. So this is in alignment with global REIT practices.
Okay. Abhishek, thank you for joining in the studios. What does this mean from somebody who manages funds and deploys money? What does this mean for an average investor, and what does this mean for the asset class?
Neeraj, thanks for having me here. It's an absolute pleasure. Good morning. This is, like Ramesh mentioned, this is a fantastic move by SEBI. See, REITs and InvITs have been a little new instruments to the Indian market. They're neither equity nor debt. They're somewhere in between, which is why earlier SEBI used to classify them as hybrid. And then they had a restriction of 10%, which mutual funds could put in of their corpus into such instruments. Now, this development has actually removed the REITs, which is the investment trusts that are focused on real estate, out from the hybrid and into equities. So this has two benefits. The first benefit is that the mutual funds don't have any restriction of 10%, and they can freely invest into REITs.
Okay.
And the other benefit is that the hybrid category of 10%, which was split between REITs and InvITs earlier, is now available only for InvITs. So for both the categories of investment instruments within such investment trusts of REIT and InvIT, the investors, especially mutual funds, can take more exposure. Now that actually has couple of benefits. You know, it increases the vibrancy of the market, the depth of instruments, the floats, etc. And through mutual funds, the retail investors can get more access to such good instruments.
Got it. What would you guys as asset managers do now? I mean, does this increase your appetite for both of these asset classes? And are you already kind of looking to raise capital to deploy further into these asset classes?
Oh, absolutely. So it's great news for us asset managers. Earlier the investor categories open for such instruments was limited. Now it's opened up to mutual funds, and mutual funds, AUMs is very large. So with more money going into such instruments, the education is increasing, the people's appetite is increasing, and hopefully over time we'll see good performance of these instruments, especially in the volatile markets. These instruments, I believe personally that these should stand out in terms of performance, and that improves our confidence. It improves our ability to raise and channel capital towards such instruments. So we are pretty pleased about that.
Got it. Ramesh, can I ask you, I mean, because in your business, if you will, right, direct retail investors participate directly and not through necessarily the fund route as well. What should an average investor think of this move when it comes to investing in a business like yours? So if I want to buy equity in your company, and I'm thinking what has changed for Mindspace Business Park REIT between then and now that enhances the value for an equity investor, what would you say?
From a few hundred or a few thousand investors back in 2019, today close to 300,000 retail investors have invested in REITs in India. If you look at our REIT, in the last 5 years, we've given a total annualized return of around 15.8%. And in the last 1 year, we were given a return of close to 36.6%. That's kind of, I think, very good performance in a market which is so uncertain and volatile, global market, Indian market. For a investor point of view, I think this will help various index inclusions, which is like Abhishek mentioned, which is really good. This will also there'll be a lot more interest from mutual funds, insurance company. Mutual funds have already invested close to 30,000 crores in the REITs. Insurance companies, again, around 20,000. FPIs have invested close to 25,000 crores. So there's going to be greater investor base, which means more liquidity, and better price discovery.
Right.
We also feel there would be more Asia allocations coming from FPI into Indian REITs based on this move by SEBI.
Got it. Ramesh, what would the current yields be? Because I remember a conversation earlier with managers who used to say it's great to buy products which are giving 12% yield. I'm guessing that if the interest gets heightened, the REIT, your REIT or any other REITs may not remain 12% products, right? They might 12% yield products. They might become lower. So what's the current yield? And if indeed the interest does go up, is there a chance that the yields may go lower?
Neeraj, the way to look at REITs is not just as a yield product. Yields today typically would be between 5.5 to 6.5%. But you need to also look at the appreciation of price. And that's the number which I was talking about. If you look at from a total return point of view, the last 1 year, 36%, last 2 years, 27%, and the last 5 years, 15.8%. So you need to look at it from both those point of views, not just look at the yield.
That's a fair point, but I typically remember that people look at the dividend yield or the return on a REIT or an InvIT and the yield that comes in from the product, especially during tough volatile times, right? Because that was the clear adage when this whole thing came about, that you can buy into products which give you a nice coupon and maybe some capital appreciation at a point of time. So from a fund manager's view, I mean, if it's 5%, 6%, etc., does it make it attractive for you, or how would you think of it? And please, Abhishek, to invest into your fund, I need large oodles of capital, but I have the option of buying into a REIT directly as well or an InvIT directly. So try and give me an answer from that perspective.
Right. Neeraj, very interesting question, and that kind of opens up the matter quite a bit. So a couple of points. Okay, the first point is what is the yield, right? The yield for a REIT is different, and the yield of an InvIT is different. See, what a REIT holds real assets, okay, real estate assets, which are perpetual. Like, I mean, for example, if Mindspace or Ramesh has purchased an office property, that property will remain with him for eternity. Infrastructure assets, which we typically own, are different. They are finite life because there's a concession, and after the concession, the asset goes back to the government, which is the way it should be. So in REITs, the value of the instrument that an investor buys includes the distribution as well as the value of that property. Now, that value of the property typically rises because real estate increases and people can make money in terms of capital gains over time. But the converse thing is that the yields in that, or the distributions per year for a REIT, are comparatively lower. So what Ramesh mentioned is exactly right. It's around 6 to 7%. Infrastructure, on the other hand, ends in 15 years, 20 years, 25 years, as the case may be. So there's a finite life property or asset that you're having, resulting which the distributions are pretty high, but the capital gains are appropriately lower. But the returns wise, both can be comparable. It depends upon what's the objective of the investor. Like if there's an investor who wants yields, maybe they need an income, then InvITs are better. Some people who want to play the real estate market or participate in the growth of real estate, REITs are better, and they get a nice little dividend yield as well. So that is the thing that is to be kept in mind, slight nuance between REITs and InvITs. The other thing is that how are...
We're out of time, but
Sorry.
yeah, just very quickly, 30 seconds. Yeah, please finish your point.
I was just saying how can investors, and to your point, how can investors participate more into these products? These products are new, okay? The listed units which people can buy off the exchange are limited, but more and more are coming in. There are a number of privately listed InvITs that are there in the market, which are closely held by large institutional investors. Slowly over time, they will list over time, and that will give a large opportunity for retail investors to participate in these instruments.
Okay, an asset class which is new, if you will, or relatively new, but opening up and may give you steady returns in volatile times, and SEBI is doing what it can in order to make it simpler for investors. Gentlemen, both of you, thank you so much for taking the time out and being with us.